All right, Jackie, you're good to go.
Hi, I'm Jackie with Military Saves, where we encourage military service members, their families, and veterans to reduce debt, save money, and build wealth. As a nonprofit organization, a key component to our mission is encouraging you to take our Military Saves pledge. So, we're going to provide a link to that for you so you can get started on your financial wellness journey with Military Saves. So, today's midday money chat is based around the fact that October is Credit Awareness Month. So, we're joined with Tom Quinn. He is the Vice President of Scores with FICO. Tom has had over 25 years of experience with FICO, and he's established a history working with regulators, legislators, lenders, the media, and other industry entities to help them better understand the power of credit scoring, technology, and its benefits to the financial industry and consumers. So, Tom, thank you so much for talking with us today.
Happy to be here. Looking forward to it.
Absolutely. Well, if you're tuning in, Tom is going to tell you everything you need to know about credit scores, credit cards, achieving a good credit score, and maintaining that. So, without further ado, we're just going to jump right in and I'm going to ask you some questions. So, first off, I'd like to kind of talk about myths and misconceptions when it comes to credit scores. For example, some people think that they have to carry a balance on their credit card. And then what happens if you're carrying a balance and then you close out that card? Does closing a card affect your balance? I'm sorry, does closing a card affect your score? So we can talk about basically those two things. Do you have to carry a balance, and what happens when you close it?
Sure, yeah. So there's a lot of information out there about score, so I'm happy for the opportunity to kind of clarify some of these points for your listeners. So the question about do you have to carry a balance to get a score, and the answer is no. The requirements for minimum score criteria are that you have to have at least one credit account that's been open for 6 months or greater and has been reported on in the last 6 months. So there's no requirement that you carry a balance. However, when you think about what the score is trying to do, it's trying to predict that you can manage your credit wisely. So if you're carrying balances and you're managing them responsibly, that's going to result in positive points. So the score wants to see that you have access to credit and that you're using it, but you're using it responsibly. In terms of closing down credit cards, so I know a lot of us have a lot of credit cards that we've acquired over time, and we have a lot of them probably in our bureau dresser drawer that we never use. There's no benefit to the score of closing down a credit card account, and in fact it could potentially harm the score, and that's because of a thing called credit utilization. So let's assume you have two credit cards and both cards have $2,000 credit line available to you. And on one card you have $1,000 balance and on the other card you have a zero balance. So what we do is we look at how much of that available credit you're using. So you have $4,000 available total and you have $1,000 balance. That means you're 25% utilized. If you close down the credit card with a zero balance, you're taking away that line as well. And then your ratio goes up to a 50% utilization. And the data tells us when we're building the models, the more heavily utilized you are on that credit card, the riskier you are. So closing down that card has no benefit to the score, but it could actually be harmful to the score. A couple other fallacies that I hear a lot out there is there's this perception that you have to make a lot of money to have a good credit score, and that's actually not true. The score does not assess your income because it's not verified on the credit report, and so therefore the income doesn't even factor into the score. Now, a lender may ask you for your income information as well to determine if they're going to give you the loan, but from a credit score perspective, there's literally millions of consumers out there that aren't making thousands and thousands and thousands of dollars each month that have great scores. So that's not an excuse to have a low score. And then the other fallacy I hear a lot out there is people that maybe are in a situation where they have some credit blemishes and their score is lower than what they'd like it to be. They're kind of feeling that that poor score will haunt them forever. But the good news is the score is actually forgiving. And if you had some credit blemishes in the past and they're on your report, as those age and fall off the credit report, they'll have less impact on the score. And your new credit behaviors, which hopefully are you're paying bills on time and keeping balances low, will help to reward you with positive points. So that poor score is not going to haunt you forever. It will change as long as your underlying behaviors change to drive that increase in score.
Wonderful. So what I hear is that you're saying it takes a good time or amount of time and then a lot of good behaviors just repeated to help keep that score positive. But the next question I have is a lot of times you're driving down the road and you'll see those signs that'll say, we repair credit fast. Are there any quick fixes to credit and should you pay someone for those services?
Sure. Well, I don't know about you, but I know when I was growing up, my parents were quick to always point out if it sounds too good to be true, it probably is. And I think that holds very true with credit repair advertisements you see on the websites and on billboards, etc., making claims that they can take a low score of, let's say, 580 and change it to an 850 in a couple days time, and that's just not the case, at least for most people. So if you are in a situation where your score is not great or you're having trouble managing your debt, and you're looking for help, there's kind of two groups of people there. There's the do-it-yourselfers, and then there's people who maybe need some assistance to help them. So if you're a do-it-yourselfer, the first thing I'd recommend is you get a copy of your credit report, and you can do that for free at annualcreditreport.com. It's a legitimate, safe site. It's run by the FTC, and then you can evaluate your credit report to make sure that all the information is being accurately reported. And then you can also go out and get your FICO scores at myfico.com and Experian.com, and gives you an idea of kind of where you stand when you see your FICO scores. And then you want to look at the negative information on your credit report, like past due payments or high balances, etc., to kind of understand what's driving your score to be low. And those reason codes that you can read will help you understand that. And then you would focus strategies on trying to increase your efforts to reduce debt. And then again, with delinquency information, if it's valid, you just kind of have to wait as time ages those delinquency counters, and they have less impact on the score. If you're not a do-it-yourselfer, there's nothing wrong with that, seeking out help. But I think the main message here is if you do need help, you want to make sure you're dealing with a reputable company. And there's a lot of reputable counseling services out there. Operation Hope is one that I'm familiar with, and they're totally legitimate. And there's other ones out there as well. And you want to do your homework by doing research on the web, look at the Better Business Bureau rating of the company that you're thinking about dealing with, do Google searches on it just to see if there's a lot of consumer complaints. And a big red flag to look out for is if they ask for money up front for helping you to manage your credit, then that's a big red flag that you'd want to stay away from, because the nonprofit credit counseling agencies typically don't request any fees from you, the consumer seeking that help. So if you're in a situation where you're evaluating one of these entities and they ask for upfront fee of $100, whatever, that is definitely a red flag to say, nope, I'm going to go look and see if I can find another reputable company to deal with.
An excellent tip. Thank you so much. Well, now some of our service members and their families, they're young and they don't have credit history, period. They don't have it yet. So, is that the same as having bad credit, having no credit? And what are some good ways to build that credit for those families who are just starting out?
Yeah, that's a big challenge in our credit environment. It's kind of a catch-22 where you need to have credit to be able to get credit, because the lender wants to see that you've managed your credit before they'll extend you new credit. And I know that's a challenge for new to military personnel, as well as just young people in general or immigrants into the population. So there's kind of three main ways that I think of ways to help someone establish credit if they're new to credit. So one would be uh, applying for a secured card. So any institution like a bank or credit union, you can go in there and sign up for a secured card, which basically is you're putting money down in like a certificate of deposit, let's say $500, and they're giving you a credit card that will go against that $500. And the good news about that secured card is that it's reported to the credit reporting agency just like a regular credit card. And so as you show making payments on time with that card and keeping your balance balance is low, it'll help your score. And then other lenders and credit card issuers may find you more attractive to try to get you to open up an account with them. So that's one option for establishing credit. Another is becoming an authorized user on a trusted family member's account. So if you have a parent or a relative that has credit and manages her credit well, if they have credit cards, you can have them contact that credit card company and say, I'd like to put my niece, nephew, son, daughter, whatever on my credit account. And that would label you as an authorized user on their account. And again, that's reported to the credit reporting agency like a regular credit card and can help you establish getting credit that way. And then the third way is if you're seeking kind of a more of a installment type loan, like a car loan or a student loan or one of those types of personal finance loans, you can do that as a co-applicant with again a trusted family member. And when that's approved, the both you and the family member are liable for the payment of that loan amount. But again, it's being reported to both your credit report record as well as the primary applicant's credit report. And that again is a way to help you establish credit if you're kind of in that stage where you don't have credit.
Okay, excellent. Well, then that leads into my next question. If someone knows that they're going to be shopping for a loan or a credit card soon, is there anything they should know?
Sure. So if you're thinking about, you're going to need a credit card in the future, for example, the holidays are coming up, or you're planning on purchasing an automobile in the next year or next 6 months, I'd say the first thing you want to do is just to get a copy of your credit reports. Again, annualcreditreport.com is a free site that you can access those, and just check for errors. And if you find any information that's inaccurate on that credit report, just follow the easy to use dispute processes that the bureaus have set up, and they have 30 days by law to investigate your dispute and provide resolution. So that's the first thing, is to just get your house in order and make sure that your credit reports are accurate. Then you want to see potentially how the lender sees you from a rating perspective. So get access to your FICO scores and see what they are. And if they're not as high as you would like them to be, or what you think the lender would have as a cutoff, then the negative factors that come out with the score will tell you where you need to focus, like paying down debt or um, aging of time, so the inquiries in your credit history ages. Typically, most lenders consider a score in the upper 600s or higher to be acceptable. So that kind of gives you a little bit of a barometer of what where you'd want to get your score. So if your current scores are less than in the upper 600s, you want to kind of get them to that part. If your scores are above the higher 600 level, then you probably have a greater likelihood of being approved for the loan. And doing those two things will help you better be prepared, or be more prepared for that loan process, and hopefully increase your chances of getting approved for the loan. But one thing to remember is that while the score is very important and lenders rely on it quite heavily, they also look at other information when they're evaluating you for a loan, for example, your income, etc. So it's not just all about the score, it's about the score and other information as well.
Wonderful. So, is there anything that military families need to watch out for during the holidays when it comes to their credit?
Yeah, I think not just military families, but all of us, we want to make sure that we don't fall in the trap of overcharging. And I know that's easy to do in the holiday season when you're trying to get gifts and make family members happy. But it's really important, if you can, to set a budget of what you want to spend on aggregate and try to stick to that as closely as you can. I know for myself that's hard, but it's something that I try to do each year. And then with this year, obviously being so different with the COVID-19 virus, there's going to be a lot more online shopping than probably in the past, as people would avoid crowds at shopping malls, etc. So you just want to make sure that you're conscious of your identity and protecting your identity from illicit practices and theft. So when you're buying stuff online, make sure it's a reputable site and someone that you trust. So like buying something from LL Beam versus a pop-up ad that maybe surfaces that sells the kind of same stuff, but looks a little bit suspicious. So just be conscious of the sites where you're giving credit card information and making purchases just to help protect your ID.
Wonderful. That's a great idea. I've never even thought about that with the pop-up sites. I think that's great to go to a reputable online vendor that you're comfortable with. And what's interesting too, I think about how you go out in the stores in the past and everyone would offer a store credit card. And now that's probably not going to be happening quite as much. Um,
Oh, they'll still offer it online.
yeah, so they'll still find a way. Um, do you have any advice about that actually? Is it better to just have one trusted credit card, one or two, or is it okay to pick up the one from Target or from every which retailer? What would you recommend on that?
So I think that's something you need to think through. So we've had stories where I've actually interacted with consumers where someone will open up a credit card with a retailer to get the 10% discount
Mhm.
on curtains or whatever they're buying that day. But then the impact on their score is something they hadn't thought about. So one of the things that the model's looking at in its assessment of risk is how long you've had established credit. And so if you go out and let's say this holiday season, you're shopping online and then you get discounts if you open up a credit card with that retailer, then if you open up 3 or 4 credit cards, that's going to make your average time in file with credit history lower, which is more risky and could cause loss of points. And then also that Target or LL Beam or whatever retailer you're opening with will pull a credit report inquiry on you to evaluate your credit before granting you the extension of the credit. And those inquiries will add up and start impacting your score as well. So at the long range view of it, getting a 10% discount off of a Game Boy station may not be worth the negative impact it has on your credit and not being able to get credit at cheaper rates because your score is lower.
That's excellent advice. Thank you so much for clearing that up because I know in the moment, I think a lot of people think, well, yes, I'd love to get that discount, and they don't look at the long range implication there.
Yeah.
Wow. Well, thank you. So I know that there's a big question. You're with FICO, you've been there for 25 years. So, what is the secret to having a high FICO score?
Well, um, it's not really a secret. It's just basic common sense. The three things you may need to do as a consumer to either keep a high FICO score, get a FICO score is number one, pay bills on time. That's the number one piece of information the model's looking at, and it contributes about 35% to the score's overall value. Um, and so you want to make sure that you pay bills on time. And if it's a credit card and let's say you don't have enough to pay it off in full, it's still, make the transaction to pay the minimum balance so you look current and it's reported as current to the credit bureau. The second kind of secret ingredient is keeping your levels of debt reasonably low. So that means, credit card balances should be kept as low as possible. Obviously, with installment loans like a mortgage or a car loan, you have a fixed payment amount that you have to make. So that should be the value that you're paying. And then the third is only apply for credit when needed. So again, the Christmas shopping example where you go out and open up a bunch of retail cards to get some discounts may not be the wisest move for your score long term. So if you pay your bills on time and you keep your debt levels reasonably low and you only apply for credit when you really need it, that's the secret sauce to getting a higher score. And if you have a higher score, of maintaining that higher score going forward.
Excellent. Thank you so much. That's all such valuable information and very organized. And I'm happy to, after this live, if any of you viewers have questions that we can help you with military saves or that Tom with FICO can help you with, please go ahead and post those below and we'll make sure to get back with you on those. Tom, do you have any other tips or tricks that you'd like to add for today that we may not have covered?
The only other piece of information I'll reiterate is that the score is dynamic. It changes and moves as your underlying credit bureau data changes and moves.
Mhm.
So make sure that if you have a low score, that you don't let that bring you down and think that you'll never be able to improve that score over time. So let those blemishes age or purge off your credit report, and then continue to make payments and keep your debt levels low on your new credit, and that'll be what you need to do to get that score up over time.
Wonderful. Well, thank you so much for your time today. It's been a true pleasure. To your credit, you did a wonderful job. A little
It
credit
was great.
humor.
It was great
Yeah.
talking with you, Jackie, too.
Well, thank you. And those of you who tuned in today, thank you so much for joining our Military Saves Midday Money Chat with Tom Quinn from FICO. And we'll look forward to talking with another guest next month. Thank you again, Tom, and thank you all for watching. I hope you have a wonderful day.
Thank you.